Good afternoon, everyone. It's an honor to address you today on a subject that lies at the heart of India's evolving insolvency framework. First, tell me, I'm audible.
Yes,
I
sir. Yes, sir, you are audible.
Today's topic is corporate restructuring under the IBC code 2016. In today's dynamic business landscape, companies often face financial distress due to market volatility, economic downturns, or internal inefficiencies. The IBC 2016, enacted as a game changing reform, provides a comprehensive legal framework to restructure corporate debtors in a time bound and creditor driven manner. Actually, it replaced a fragmented and protracted legal regime with a unified, transparent, and resolution oriented process. Actually, corporate restructuring under IBC is not just about saving failing businesses. It is all about reviving viable enterprises, maximizing assets value, and ensuring equitable treatment of all stakeholders, including financial and operational guiders, employees, and shareholders. This restructuring may take various forms: debt reduction, equity infusion, assets monetization, or even merger and amalgamations, all within the structured framework of the corporate insolvency resolution process. What makes this process effective and credible? The answer lies in the IBC core principles: characters empowerment, professional management through insolvency professionals, and strict timelines that promotes speed and discipline. The code also ensures judicial oversight by the NCLT, safeguards stakeholders' interests, and promote value maximization over debt recovery. Unlike traditional restructuring mechanism, the IBC creates a space where distressed companies are no longer doomed to liquidation by default. Instead, they are provided with a legal and economic environment that facilitates strategic turnaround through collaborative and transparent decision making led by the COC and implemented through resolution plans. In today's session, we will explore the legal and strategic foundation of corporate restructuring and IBC. What is the objective? What are the issue and challenges? What is the process? What type of corporate restructuring? We will also discuss the landmark judgment for the purpose of better understanding on this topic. The roles of different stakeholders, COC, resolution professional valuers in the restructuring ecosystem, key mechanisms such as debt restructuring, capital reorganization, and mergers, the significance of judicial pronouncements that have shaped restructuring practices, and the impact of IBC on India's overall credit and business environment. Our goal is to develop a practical, principle-driven understanding of corporate restructuring under the IBC, and understanding that will help professionals, regulators, and stakeholders navigate the complexity of insolvency with clarity and confidence. Let's now begin our session under the IBC code 2016. Let me share PPT. Just give me 1 minute. I will have to restart. I'm unable to share PPT. Just give me 1 minute. I hope PPT is visible to everyone.
Yes, sir, it's
Yes, sir.
visible.
Yes? Visible to everyone?
Yes, yes.
It's
Okay.
yes.
Okay.
Yes.
Sample corporate restructuring under the IBC code 2016. In the evolving landscape of corporate finance and governance, business faces multiple challenges, including financial distress, unsustainable debt, operational inefficiencies, and legal complexity. In such situations, corporate restructuring becomes a vital strategic tool to restore viability, preserve values, and protect stakeholders' interests. Prior to the enactment of the IBC, India lacked a unified and effective framework for dealing with corporate distress, leading to delays, low recoveries were there, and widespread erosion of economic value was very much. Recognizing the urgent need for a time-bound, transparent, and creditor-friendly resolution mechanism, the Government of India introduced the IBC code to overhaul the insolvency regime. The code established a comprehensive legal framework for insolvency resolution and restructuring, ensuring that distressed entities are either revived through resolution or efficiently liquidated in a value maximization. If revival is not possible through CRP, so then entity will go to the liquidation. But our prime objective is to revive the business, not shut down or close the business. Process under IBC empowers creditors, brings in market discipline, and aims to ensure the continuity of business where feasible. Corporate restructuring under the IBC is thus not merely a legal remedy. It is a reform-driven economic strategy aimed at preserving the going concern status of businesses, reviving the corporate sector, protecting employment, strengthening the kite system, and promoting entrepreneurship and investors' confidence. When we appointed as a insolvency professional, so then when we are in the process CRP, then our approach is going concern approach. But if CRP fails, when we are in the process of liquidation, then our approach is liquidation of value, because in that process we have to sell the asset. Our main aim is to shut down the business, to close the business, and after and to sell the assets at a maximum price so that we can distribute sales realization among the creditors. Corporate restructuring introduction. Meaning and scope. Corporate restructuring refers to the process of reorganizing the financial, operational, managerial, or ownership structure of a company to improve efficiency, restore viability, and maximize value of its stakeholders. It may take the form of mergers, acquisitions, demergers, debt restructuring, or turnaround strategies depending on the situation of the company. The goal of corporate restructuring is not only to address financial distress, but also to ensure the long-term sustainability and competitiveness of the enterprises. Position in India before IBC. Prior to the enactment of the IBC code, India had fragmented and inefficient restructuring regime. The multiple laws were there and forms. that led to a overlapping jurisdiction, procedural delays, and poor recovery outcomes. So that was the main issue and challenges are being faced because there were so many multiple laws and also there were multiple forms. So in this process, it was taking very much time, and that was not a time bound process. And also recovery rate was very poor. Because when it was taking very much time, so then recovery rate was also very less. There was a provision of ISIC Industry Companies Act was there, established the board for industrial and financial transactions BIFR to revive or shut down the company's weaknesses, promoter driven process. That process was a promoter driven process. Now current IBC is a tighter driven process. There was a long delay, misuse of references by promoters to stall titers. BIFR became a shelter for defaulting promoters. Result, more than 60% of cases dragged on without resolution. So that was the limitation and that was the weaknesses in the earlier acts. And there was another provision, Companies Act 1956, 2013, schemes of arrangement, sections 391 to 394, now 230 to 230 under the Companies Act, provided for mergers, amalgamation, and compromises between company and creditors and shareholders. Okay. Required court approval. Now, in case of merger and amalgamation, and all the applications are submitted with NCLT as per the Companies Act 2013. Weakness is very slow due to court-driven process. Earlier, if company wanted to go for a merger, amalgamation, so they used to go to the high courts, and in these courts, it was taking very much time. So that's why IBC came into the picture. So now in IBC there is a NCLT, NCLAT, and companies submit their application in NCLT and then can appeal to in NCLAT. If they are not satisfied, they can go to the Supreme Court. So now IBC is a time-bounded process, more suited for solvent restructuring, not effective in insolvency and distress situations. Okay. Now there was another act was there, Recovery for Debt Dues to Banks and Financial Institutions Act was there in 1993. That was called RDDBFI Act, established debt recovery terminal to enable bank and financial institutions to recover dues. There was a weakness, focused only on recovery, not revival or restructuring. That was the main issue with the earlier acts. They were not focusing to revive the business. They were only their aim was to recovery. Whether government was also focusing on the recovery part, means if there was a due from tax authorities, whether tax authority, whether indirect authority. So their first aim was to recovery. They were not very much interested to revive the business or restructuring the business. So ultimately, that was giving the negative impact to the economy. If business is revived, later or sooner, government will also get tax from the companies from industries. Means if business will revive, so they can get more tax in coming years. If they will shut down the business, then what will happen? They will recovery. Okay, but ultimately, economy will not grow, industry will not grow, company will shut down. There will be unemployment will also means rise in this situation. So means their focus was to recovery, not to revive or restructuring the business. Significant backlog of cases, because when company was approaching to the honorable courts, so due to so many cases already with high courts, so it was taking very much time. Now NCLT is a specialized court which is only dealing with the corporate related matters, IBC, IBBA related matters or Companies Act related matters. significant. If we have to submit the application as per under IBC section 7, section 9 and 10. Okay, so we will directly go to and to submit the application with NCLT. If we are to go, we are to do amalgamation, merger, reconstruction, so then we can also submit the application with NCLT. Then now there is no need to go to submit the application with high courts. And in IBBI code, that is a time bound process, because when we are in the process of CRP, only time is given for 180 days. With extension 30 plus 30, we have to complete this process maximum within 330 days. If CRP fails, then we have to go to liquidation. So then liquidation, we also, there is a time bound period. We have to complete the liquidation as per the standard means timeline. Within 365, within 1 year, we have to complete the liquidation. Significant backlog of cases, GRT were overburdened, didn't address multi-client coordination. There was another act was also there, SERFACI, 2002. Empowered secured creditors to take position of collateral and enforce security interest without court intervention. Okay, allowed banks to transfer NPA, okay, non-performing assets, if company was not paying the principal and interest to the banks. So they, after NPA, so they transferring these transactions to the asset reconstruction companies, and asset reconstruction companies, what the secured creditors, secured assets in their custody, and they were get the recovery.
काय झालं?
Okay, but there was only secured creditors.
NSD.
Secured creditors are benefited. Unsecured creditors were left out. So that
बरोबर.
we miss no.
हा ते वन टाइम असतो. आता तुम्ही
I think others should mute. Except the speakers, others should mute.
हो
That's the someone is unmute.
Can admin mute everyone other than the speaker?
Allowed banks to transfer NPS to assets reconstruction companies. There were the weaknesses. Only secured creditors benefited. Unsecured creditors were left. There was also a limitation in the.
Sir, now you can unmute yourself, Rajinder sir. Rajinder sir, I have mute all. You can unmute yourself.
Okay. Okay. Focus on recovery and enforcement, not resolution. They, as per this act or provision, they also focus was on recovery, not on resolution. Main limitation was in this act is this: they were in this act only secured creditor was a secure. Okay, and what about if company is running and if loan given by bank against secured assets, if bank will take that secured assets, that will impact on the business. Business will means there may be chance of shut down the business. So then what will happen? Ultimately, secured creditors can get recovery from the secured assets, but what will happen with the unsecured creditors? So they were left out. That was the weaknesses in this act also. Focus on recovery and enforcement, not resolution. The same issue was there also. Misuse by some banks led to prolonged litigations. Okay, now problems with the pre-IBC regime, fragmentation of laws, not unified frameworks, multiple forms like BIFR, High Court, DRTs, etc., cause jurisdictional conflicts. That was also a problem. Data in position model. Promoters retained control, often misusing the systems to delay repayment. Because the power was also in the hand of the promoters. So they were also not cooperating. They were also misusing. Okay, so that was the challenges are being faced. by previous under the previous acts. Delay and value restriction, average resolution took 4 to 6 years. By then, assets value was heavily eroded. Means if it will take, if we have taken decision, we are not in situation to revive the business. Okay, if we have submitted and moved application with High Court, if we want to close the business, then if it will take 4 to 6 years, so then because in this situation they were also misappointing the liquidator. If it will take 4 to 6 years, then what will happen? Plant and machinery and all the running assets value will definitely reduce. This start means very much. So that means delay and value destruction was very much with the pre-IBC regimes under the all these acts. Low recovery rates was there. Creditors could recover less than 20% of their claims under earlier law. Okay, the global ranking. India ranked 136 out of 189 countries in World Bank resolving insolvency index in 2015. Okay, so means we were at the 136 out of 189 countries. That was the global ranking. Okay, so that was very poor because the recovery and revival rate was very poor. Now, so that's why paradigm shift with IBC 2016. The IBC code 2016 was enacted to consolidate and replace this scattered laws with a single comprehensive and modern insolvency framework. Okay, what was the silent feature of IBC? Single unified law covers companies, LLPs, partnerships, and individuals, and instead of promoters, now control given in the hand of the creditors. Okay, now when we are submitting application to section 7, section 9 and section 10, means all the management power is given to the IRP or RP. Okay, and IRP or RP means handle the business or manage the business. Okay, but all the decisions are taken by the COC. All the commercial decisions are taken by the COC. So in COC, who are the members? Mainly creditors are the members in the COC limit. 18 major creditors are or will be part of the COC. Now, management shifts from promoters to an independent resolution professional supervised by the committee of creditors. Now, there is a time-bound process, 180 days, extendable to 330 days, max to complete the IRP. Okay, so that is the final feature of the IBC code. Okay, means as per IBC code, our intention to revise the business. If not possible, then we will go in the liquidation process. Okay, our main aim is not to recovery, means or the dues. Our main aim is to revive the business. Maximization of value, focus on restructuring and revival rather than mere recovery. Okay, and there is a waterfall mechanism. Clearly, priority of claims in liquidation. There is a waterfall mechanism. We will discuss it detail in the further slides. Okay, means if we are in the if CRP fails, then we are in the liquidation process. So when liquidator will sell the assets, after selling the assets, all the sale proceeds will be distributed in to the creditors as per the waterfall mechanism under section 53. Specialized educating authorities in as per this act, NCLT for corporates also there. DRT for individual and partnerships are also there. Now, there is two things pending as per IBC code. There is no specific rule and regulations as of now. We have for post-court insolvency process, for another one is group insolvency process. There was a landmark judgment on video one, we will discuss in last slides, because we are waiting for these two means in two means parts, specific rule and regulation. Now earlier judgment was given by the NCLT, because as per IBC code, NCLT have the inherent power under the rule 11. Okay, so NCLT can means handle and manage to the related matters. Okay, so means as per using their inherent power as per rule 11, so the judgment given by the NCLT or NCLT on the means group insolvency. The landmark judgment was on the video one case. We will discuss later on. Means as per IBC code, right now IBC code is not complete. On time to time, government is doing the amendment as per the means business requirement, as per the industry requirement, and as per the means as per the economy. Whatever is required, government is taking action and doing amendment in IBC code on time to time. So then the two things are still pending, and committee is working on it, and very soon we will have a specific rule and regulations related to group insolvency as well as cross-border insolvency prevention. But it doesn't mean if we don't have specific rules and regulations on group insolvency, although NCLT have the inherent power under the rule 11, so they can take means they can take decision and handle and manage on the rating matters. Impact on IBC, improved recovery rates. What was the impact after means introduce the IBC code? Improved recovery rates. Average recovery increased to 40 to 55% compared to which was earlier. There was a 20% recovery rate was there. Now the recovery rate has been increased around 40 to 45%. Now another impact was there, faster resolution. Resolution timeline shortened drastically compared to the earlier segment. Earlier it was taking 4 to 6 years. Okay, now as per standard timeline, insolvency professionals have to complete the process within 180 days. Okay, if not possible due to any reason, so there is also a provision for extension for 30 days and for further 30 days, but total standard time given for CRP maximum is 330 days. Now global recognition. Now see, earlier rank was 136. Now India's rank in World Bank's resolving insolvency improved from 136 to 52. Okay, so that is a major impact after introducing IBC code 2016. Now cultural shift. What was the cultural shift? From debtors in position, from promoters to creditor in control. Because in COC, as you know, all the commercial wisdom decisions are taken by only COC. We will also in further slide discuss what is the process, because and in this process, as this is mandatory to appoint a registered valuer, then resolution professional is appointed by COC. First, as you know, there is the appointment of IRP. IRP is to means to organize the COC meeting within 30 days. Within next 10 days, COC is to appoint the insolvency professional, and after his appointment within 7 days, he has to appoint the registered valuers. And registered valuer submit submit the, because when insolvency professional hire registered valuer, we have to hire for 3 different class of registered valuer as per mandatory requirement. We have to hire SFA, plant and machinery, land and building, and 2 for all the class, 2 registered valuers we have to appoint. Okay, now But and this is mandatory. And why this is mandatory? Because COC is to take the decision on the resolution plan, which resolution applicant submit the resolution plan as per the timeline, and COC have to take the decision on the resolution plan. If COC will approve the resolution plan, then NCLT approve the resolution plan. But COC also would like to know what is the value of the assets. Okay, so that if they don't know what is the fair value of the assets, so they also means it is very difficult for them to take decision. And they will not also not in position to negotiate on the resolution plan. So that's why they also would like to know if what is the fair value, what is the actual value of the business, what is the value of the assets, so that they can take decision. But what happens in case now two things comes here. I am also discussing practical issue and challenges. Means if there is a major difference in registered value reports, but what do we understand by major difference? Major difference means if there is a difference is around 25% or more than 25%, so then that means that is a substantial difference. If there is a difference is 2%, 3%, that is acceptable. If there is a major difference, then we have to hire another registered valuer. Another registered valuer will do the reconciliation if on what basis that difference is coming. Okay, so that is helpful to understand why what is the reason, what methodology, and what is the base, what is the reason of that difference. Okay, now another question comes: if registered valuer submit the report with the insolvency professional will review the draft report. If he found if something is missing, so then he will approach to the registered valuer, and then registered valuer will do the changes. If something is missing, it doesn't mean if means insolvency professional saying, so then he will change the report. No, as per rule and regulations, he will submit the valuation report as per valuation standards, as per guidelines prescribed by IBC, as per valuation standards, whether it's the international valuation standard, whether valuation standard issued by ICAI or RVO. Because as of now, government still, as of now, we don't have valuation standards issued by the government of India. Till the time government issue the valuation standards, we are following the international valuation standard or valuation standard issued by the ICAI or RVO. Now, question comes ki whether when resolution registered valuer have submit the valuation report with the insolvency professional, or insolvency professional will share that valuation report with COC. If COC means will take the decision on the basis of the registered valuer report, is this mandatory? Question comes: no, it's not mandatory. COC only refers that valuation report. Okay, that is not mandatory to take decision only on the basis of the valuation report. Okay, and also now there is a question comes, as we know, the CRP is a time-bound process, and liquidation is also time-bound process. Is there any mandatory timeline given to the registered value to submit the report? Can anyone tell in chat? Why is it not coming properly?
Your voice is brisky. There is a breakings.
Now coming or breaking? Now why coming? Okay. I will speak loudly. See. Okay, now my voice is clear.
Yes, sir, it is audible.
Saying we are also discussing the practical problem and challenges which we face during insolvency process. I was talking about all the commercial wisdom decisions are taken by the COC. Okay, and insolvency professional have to hire registered valuer. Okay, within 7 days of his appointment, whether in CRP, whether in liquidation. Now, question comes: is there time limit, mandatory time limit for submit the valuation report by registered valuer? Can anyone tell? Confirm? Someone is saying yes. Can you confirm? What is the time limit?
I think for appointment it is 7 days from the date of appointment, but there is no limit for submission of the report.
Yes, you are right. Actually, there is no mandatory timeline given in the IBC code to submit the registered value report. But there is a problem because registered valuer have to also submit the report on or before time, because insolvency professional have to share information memorandum on 54th day. Okay, and all the commercial wisdom decisions are taken by the COC. If registered valuer will not submit the report on time, so then COC will not be able to take the decision properly on time. So that will be difficulty. That will be a difficult situation. So that's why normally in CRP case in 15-20 days, normally standard within 7 to 10 days means registered value submit the report with the insolvency professional. If first he will share the draft report, in case draft report is okay, so then no problem. In case insolvency professional thinks there is something missing, so then he can approach to the valuer and ask to do the changes, but registered valuer will do the changes and amendment as per the rule and regulations. It doesn't mean that insolvency professional is saying, so then he will blindly change the report. He will do will do or can do the only changes as per the valuation standard prescribed and as per the IBBS guidelines. Okay. Now we were okay. Now there is a cultural shift from debtors in position to creditor in control, ensuring accountability of defaulting promoters. Conclusion: corporate restructuring in India underwent a major transformation with the introduction of IBC. The earlier laws, TICA, Companies Act provisions, RDD, Act, and SURFACI were inefficient, fragmented, and promoters friendly, resulting in poor recoveries and long delays. The IBC created a time bound, creditor driven, and value maximizing framework that not only improved creditors' confidence but also encouraged responsible entrepreneurship and investment. It has become the bedrock of modern corporate restructuring in India. Okay. So what is the objective? The IBC was enacted as a comprehensive legislation to consolidate and amend the laws relating to reorganization, insolvency resolution, and liquidation of a corporate persons, partnership firms, and individuals. The preamble of the code lays down its fundamental objectives. These objectives serve as a guiding principle for interpretation and implementation of the code by tribunals, regulators, and stakeholders. Resolution over liquidation. Okay. Now there are two means process in the IBC code: CRP and liquidation. In CRP, we do the resolution, and liquidation, we liquidate the assets. Core principle: the IBC prioritizes the revival and continuation of distressed business over its closure and liquidation. Reasoning: a running business has a greater value than a business whose assets are broken up and sold individually. Because when we are in the CRP process, okay, our approach is going concern approach. So then if we will do any transaction, so that will be on the, we will do the maximization or the value of the assets. Now in liquidation, we have to sold the assets because assets become distressed assets because due to the time period. There is a limitation because we have to close this process within 1 year. We don't have so much time. So that's why what happened in this case, when we are in the process of selling the assets, assets can become a distressed assets. When there are distressed assets, the value of the assets will be at lower side. So in this situation, liquidation often results in a massive loss of employment, reduced realization for creditors, and destruction of organization goodwill. Judicial interpretation in Swiss Ribbons Private Limited versus Union Bank of India. The Supreme Court observed that the prime focus of IBC is resolution to ensure revival of the corporate debtor and keep it as a going concern. Liquidation should only be considered as a last resort. Okay. That is the prime objective of the IBC code. Practical example: in the case of SR Steel, resolution was achieved through takeover by ArcelorMittal. This preserved jobs, maintained operations, and allowed creditors to realize significant value. Because in this type of corporate restructuring, what is happening? When resolution plan is submitted by the resolution applicant, so then resolution applicant will take over the business. Okay. So then that is the corporate restructuring. In this situation, what is happening? Company will go on, and the employee who is working in this company will be able to continue their job. Otherwise, if a company is not in position to revive the business, so they will have to shut down the business. In this process, what is happening? B company is coming and submitting resolution plan, and A company is getting the money and doing the settlement of the creditors. Okay, in this situation, everyone is plus situation, because if company will not company will have not to shut down the business, company can revive. In this way, industry will grow and government will also get benefited, because in future they will also be able to get the tax from the industry, from the company. Okay, and then and also the jobs, unemployment was also not be there, because the worker will not be, we will have not to discontinue. Now, what is the learning point? IBC is not a recovery law. It is a restructuring and revival law aiming at saving viable business from premature death. Okay. Now, second, maximization of assets value. Core principle. One of the foremost objectives is to maximize the value of assets of the corporate debtor for the benefit of all stakeholders. Reasoning: financial distress erodes the value of assets quickly a time-bound resolution ensures assets are preserved and maximum value can be extracted. The code enforces a strict timeline, 180 days extendable to 330 days for completion of the CRP to avoid value erosion. Okay. There is a judicial interpretation in Binani Industries Limited versus Bank of Baroda. It was held that value maximization for all stakeholders is the essence of IBC, and resolution plan must balance interest rather than favor one class of creditors. Okay. When resolution plan is submitted by the resolution applicant, the resolution plan must be balanced and also in the interest of all the stakeholders. Okay, it should not happen that the resolution plan is focusing only one class of creditors. So means resolution plan must be in balance and in the interest of all the stakeholders. Practical example, in Bhushan Steel, Tata Steel acquired the company through resolution. Had liquidation occurred, realization would have been far lower. Instead, creditors got higher recovery and the enterprises continued. Okay, so that was the practical example. Now, learning point, IBC ensures that the distressed firm's potential is harnessed optimally instead of being destroyed through piecemeal liquidation. Number 3, balance of interest of stakeholders. Core principle. The code seeks to maintain a fair balance among competing interests of stakeholders, financial creditors. Okay, because there are multiple stakeholders. When we are in the CRP process, we are in the liquidation process. What are these stakeholders? Financial creditors is there, operational creditors are there, employees are there, shareholders are there, government authorities are there. So these means government authorities including means banks, because financial creditor covering means covering the banks. Okay, financial institutions who given the loan. Okay. So now reasoning, insolvency impacts multiple parties differently. While financial creditors see repayment, operational creditors look for continuity of business, and employees depend on the survival of the enterprises. Means because insolvency impacts multiple parties. Financial creditors is interested to get their repayment back. Operational creditors look for the continuity of business, because operational creditors means they may be vendor. Okay. And they may be vendor and they are the creditors. Okay. And tax authorities claims are also covered under the operational means as the operational creditor. Employees also interested to continue the business, otherwise they will have to lose the job. So means all parties are interested to continue the business. These are the multiple parties, because their objective and aim will be different. Because if I have given money as a financial creditor, I am very much interested to get my money back with interest. Okay. And operational creditor who has supplied the material, he is also very much interested to get their money, because that creditor has supplied the goods and services to the company. Okay, and he also would like to continue. If company will continue, so then he will be able to make the money. And employees are very much means impacted due to this process. If CRP fails, if go into the liquidation, so then they will have to lose the job. So then there is a survival risk will be there. The laws provides for a committee of creditors representing financial creditors to take commercial decisions. As per this IBC code, all the commercial wisdoms are taken by the creditors. Okay, who the topmost 18 creditors are the member of the COC who represent the financial creditors. They take the commercial decision, but it doesn't mean that they will take the decision not in the favor of the operational creditor. They will, COC is to take the decision and balance the decision for in the interest of all the stakeholders. Okay. Earlier, as per earlier acts, the power was with promoters. Now, power given in under the IBC code to the financial creditors, means committee creditors. At the same time, operational creditors must receive at least the liquidation value under annual resolution plan. Okay, so that is the now with the help of judicial interpretation, we will understand in Nisar Seal, Srish Kumar Gupta, the court upheld the primacy of the COC commercial wisdom while also emphasizing that interest of all stakeholders must be considered in resolution. Okay, means all the stakeholders' interest must be considered in resolution. It should not happen if operational creditors are not in the part of the COC. So then means the interest of that the operational creditors will not be considered. That is not the objective of the IBC code. COC will take all the commercial wisdoms considering interest of all the stakeholders must be considered in the resolution plan. Practical example, in many resolution cases, workers' dues are given priority and operational creditors receive protection against being sidelined by financial creditors. That is practical example. Learning point, IBC doesn't favor any stakeholder class over another, but ensures equitable treatment and protection across all interests. Promotion of entrepreneurship and credit discipline. Core principle, the IBC also encourages responsible entrepreneurship by deterring willful defaults and fostering a credit disciplined business environment. Reasoning, before IBC, promoters often misuse legal loopholes to delay repayment while retaining control over falling businesses. Now the code introduces a creditor in control model. Once CRP is admitted, promoters lose control and independent resolution professionals take charge. Section 29A disqualify defaulting promoters. If earlier promoters were the part of the committee. Now only creditors in control model is there in the IBC. If there is a defaulting promoter, so they cannot participate, means they disqualify as per section 29, disqualify defaulting promoters for reacquiring their companies during CRP, ensuring accountability. The judicial interpretation is in SR Mittal India's versus Srish Gupta case. The court strictly applied section 29A, holding that defaulting promoters cannot regain control. If they have done default, so then they cannot regain control. Then the purpose of the IBC will not meet. So this reinforces credit discipline and finalize a shift towards responsible business conduct. Practical example, many cases such as the log industries were required by new investors rather than being handed back to the defaulting promoters. So in this case, what has happened? So business was required by the new investor was not given back to the defaulting promoters. If promoters are defaulting, so then as per section 29A, disqualified promoters cannot require the business again. If they are submitting resolution plan, so that will not be admissible. Okay. Ensure entrepreneurship promotion by ensuring that failing business can be revived. IBC gives confidence to new entrepreneurs and investors, knowing there is a fair and transparent exit rescue framework. Learning point, IBC punishes willful default promoters, ethical business practices, and at the same time creates an environment conducive to investment and entrepreneurship. Conclusion, the objective of IBC as laid down in its preamble establish it as a restructuring and revival framework rather than a mere recovery tool. It emphasizes resolution over liquidation, saving viable business, maximization of asset value, time-bound process to present value, balancing stakeholder interests, fair treatment across classes, promotion of entrepreneurship and credit discipline, fostering a responsible and growth-oriented economy. Now we will discuss how many type of means corporate restructuring under the IBC. Okay, we will discuss in detail. Corporate restructuring under the IBC primarily takes place during corporate insolvency process through resolution plan section 30 approved by the COC and subsequently approved by the adjudicating authority under section 31. If revival is not feasible, restructuring may also occur, okay, during liquidation under chapter 3 part 2 of IBC through sales the maximized value, including going concern sales under liquidation regulations. Financial restructuring. This is the most common form of restructuring under IBC and involves realigning the capital structure of the distressed company to restore financial viability. Okay. Means debt haircut, written down of liability. Okay. There is a financial restructuring. This is really very important from the corporate restructuring point of view, because most of the time company faces financial issues if they have taken loan, if they have taken their creditors, if they are not in position to give the money back to creditors. So these are the financial issues comes in normal business. So how do we handle or manage? That is called the financial restructuring. This is the most common form of restructuring under the IBC and involves realigning the capital structure of the distressed company to restore financial viability. Debt haircut, written down of liabilities. Creditors agree to accept less than the total outstanding dues. Okay. Example, in the SAR Steel, Enclave 2019 upheld by Supreme Court, creditors recovered about 42,000 crore out of 49,000 crore, 85% of recovery. Okay. Means debt haircut. So that is the means one way under the financial restructuring. Debt haircut means if creditor is agreed to accept the means lower amount. Okay, what will happen in this case? For example, if he is to take 49,000 crore, okay, and if you can go into means legal case, you know, all those things, it may happen. It will take very much time. It may also not get whatever amount that party is getting now, because what will happen in future with that company, because that company is also already in financial means stress. So in this situation, creditors agree to accept less than the total outstanding dues. That is the way under the financial restructuring. Legal basis, section 32B require the plan to provide for payment to operational creditors, but financial creditors can accept haircuts. Okay. There is another debt rescheduling. Okay. In first way, we have reduced the creditors amount. Okay. Now another way is if company is not in position to pay the debt amount on time. So there is also another way, debt rescheduling, extension of tenure, loan repayment is spread over a longer period, reducing immediate cash flow stress. Many include reduction of interest rates or moratorium or on repayment. If company is facing a financial crisis, if debtor or creditor will not support to the company, there will be very much time, there will be very much chance the company will maybe not in position to revive the business. So then company will have to shut down the business. Ultimately, they will more suffer. Okay. For example, if bank given loan to the company, okay, and currently company is facing cash flow situation. So then if bank will take legal action, so then what will happen? Company will not be able to survive. if forcefully bank will take the loan, maybe bank will be able to take the complete loan or not, because due to this cash crunch, cash problem, company business will have to shut down. So in this situation, if bank defer their loan payment for a certain period, okay, if reduce the loan EMI, if reduce the rate of interest, okay, so in the either loan repayment period is increased. For example, company have taken loan for 5 years. If loan period increase from 5 to 10 years, so then what will happen? The EMI will go less as compared to earlier. So then cash flow will be impacted. Okay, so in this way, either loan repayment time period can be increased. Okay, interest rate can be reduced. Okay, for certain period, loan repayment can be deferred. Okay, so there are so many ways under debt rescheduling. That is the another way under the financial restructuring. Okay, now there is another way, debt to equity conversion. Creditors, especially banks, may convert part of their debt into equity, becoming shareholders of the company. Alliance creditor, if credit is given by A company to B company, okay, but B company right now is facing financial crisis, okay, but business of the company is good. After certain period, company will come out of this problem. This is a temporary phase in which a company is facing this type of problem. So then what will happen in this case? A company can ask him convert my debt into the equity. So then that company will be the also the shareholder of the company. So then it will be easy for B company to revive, because now debt is converted into the equity. So then B company will have not to give the means debt and interest. So it will increase their cash flow. So then company will be able to survive. Okay, so that is the another way. If debt is converted into equity under the financial restructuring, that is the another way. Example, Electro Steels Limited resolutions were Vedanta acquired. The company and creditors converted debt into equity. Okay, so that is another way under the financial restructuring. Okay, now there is another way under the capital restructuring, infusion of fresh capital. Okay, resolution applicants, strategic or financial investors bring in new capital to revive the company. Okay, if a company is facing, they need the cash, they need the funds to run the business, because due to economic condition or industries or any global reason, global factor, if they need the working capital requirement, okay, and working capital requirement or more money, there may be money required to expand the business. Okay, maybe the company is needed to adopt the new technologies. There may be various reasons. If they need the more money to compete with their competitors, because if they are to be to survive, and if they are to capture more market, okay, if company is not in profit position, so then company will have to take the decision. If company is, say, example, on a labor-based company, so then if company needs to invest in more machinery, plant and machinery, so there may be so many reasons. If company want to survive, if the company is facing and needed capital, so then the fresh capital can be invested by the investors. Okay, so means infusion of fresh capital is also another way of corporate restructuring. Now, ensure working capital availability for operations post resolution. Okay. Priority and interim financing. Resolution professional with COC approval can raise interim finance section 2025 and regulation. For example, if I have been appointed as a resolution professional, okay, and company is in CRP process, okay, but I am to run the company, okay. If I need the funds for the smooth operations of the company on the basis of going concern approach, so then the resolution professional can raise interim finance, okay, with the approval of with the COC approval, okay. If companies, because maybe when companies in CRP process means insolvency process, so then that means company is facing problem. So that's why that company is in insolvency process, because someone taken legal action, means under section 7, okay, maybe under section 9. So there was a issue with the company. That's why that company is in the insolvency process. If that company is in insolvency process, if that company required working capital, okay, and insolvency professional thinks working capital is required to run the normal operations of the business, okay, on the basis of going concern approach, because as a resolution professional, I would like to revive the business. If there is the interim finance required with the approval of COC, so interim finance can be raised to revive the business. Such finance has super priority in repayment under section 32 and section 53. Okay. That means that during the insolvency process, whatever interim finance is arranged, so that will be repaid on super priority, means first priority, whether in CRP as per section 32 or whether in section 53 in liquidation process. Example, in several large CRPs, interim financing was used to run plants and pay employees during this process. Okay, so means these are the part of the financial restructuring. Debt haircuts we have discussed, debt rescheduling we have discussed, debt to equity conversion, infusion of fresh capital, okay, under the financial restructuring under the IBC code. Now we will see what are the types covered under the operational restructuring. Operational restructuring focuses on business process and efficiency improvement to restore long-term viability. Okay, workforce realization, downsizing excess staff to reduce payroll burden. Okay, if I have been appointed as a resolution professional, if company situation position is not good, if I am to revive the business, if I think the workforce is means much more as needed and as per the requirement of business, so then excess staff should be reduced to revive the business. Okay, but otherwise it will impact on the business, and if we will not take a corrective measures, so then company cannot be revived. So these type of the actions taken by the professional may involve voluntary retirement schemes. Okay, and there are so much employees are there, so we can also give voluntary requirement. If I needed only 80 people out of 200 people, okay, so I can also give voluntary retirement. There will be chance ki out of 250 people or 60 people, they take the voluntary retirement, because they also understand the company business is not in a good situation. So if they will not take the VRS, if in case company will go into liquidation and company take decision to shut down the business, so they will also not in means favorable situation or position. So in that case, as per means their understanding as per their personal commitments. Employee also take voluntary retirement. Now, another one is disposal of non-core or loss-making assets. Okay, that is the another way of corporate restructuring. Means we can sell the loss-making assets. If there is a non-operating assets, there are two types of assets: operating assets or non-operating assets. Operating assets generate revenue and income. Okay, if there is a non-operating assets are in the business, so then what will happen? They will not contribute in the terms of revenue or in profit. Okay, and another impact is risk due to these operating assets. When we are not using, the value of these assets will be reduced day by day. Okay, so then that is also the loss to the company. For example, if there is a non-operating asset are in the business, say 200 crore. Okay, if I will sell these two assets as of now, I can sell these assets at 200 crore. But if I will sell these assets, non-operating assets, after 1 year, so the cost of these non-operating assets will be reduced maybe 150 crore from 200 crore. So in corporate restructuring, in operational strategy, disclose of non-core or loss-making assets, sale of underutilized land, if we have, plant, subsidies to reduce debt and generate cash. Okay, so that is also the another way. There is another way: modernization of plant and process. In this situation, what is happening? We are doing restructuring, but we are reducing, means we are selling the assets. Okay, in here, modernization of plant and process. Okay, resolution applicant may propose investment in new technology or automation. Okay, here we have sold the assets which was non-operating assets, but company is facing problem. Okay, maybe we are not in position to compete with competitors due to the technology. Our competitor have a better technology, okay, and automation. Okay, so if they are using machinery, automatic machines, okay, the production is on higher side. In this way, what will happen? The cost of goods sold will be less. If we are labor intensive, working on labor intensive model, so then we are much more means spending on the labor cost. Okay, maybe efficiency and competitive is not at par, which is required, which are not at par at means as the competitors have. So in this resolution, applicants may propose investment in new technology or automation, increase efficiency and competitive. This is also the way, okay, of corporate restructuring. Corporate restructuring means we are doing the changes in the business. Okay, if that is happening due to the financial reason, so that is called the financial corporate restructuring. If we are doing the restructuring in the operational things, so that is called the corporate restructuring under the operational. That is called the operational restructuring. In operational restructuring, either we will reduce the business, okay, because our intention is to control the expenses part, okay, and increase the revenue part. So in both, if there are only two means action can be taken. If we are to revive the business under the operational restructuring, either as a businessman, either as a resolution professional, okay, either if decisions are taken by COC, means either I will increase the revenue. If I will increase the revenue, I can increase the revenue, so my profit will increase. Okay, another, if that is not possible due to somehow any reason, so if I can reduce the expenses part, so then I can make more profit. So in there are only two ways. Okay, if we have to revive the business, we will have to means make more profit more revenue. Okay, and that is only possible to means control the expenses part or increase the revenue. Okay, only two things. Okay, and for these two things, whatever the loss we are making, if we are making more loss due to the loss making assets, non-operating assets, so then we should sell those assets. Okay, if we need more money in investment, in new plant, in new technology, so then we need funds, means then we will increase the operational things. Now, modernization of plant and process. This way, due to this, what will happen? Increase efficiency and competitiveness. Another way, restructuring supply chain and vendor contracts. Okay. Okay. Now, revising or cancelling expensive, one-sided or loss-making contracts with COC approval. Okay. For example, if I can get material from one vendor with 90 days guide period, if I am getting right now raw material as per existing contract, if I have to pay advance, okay, or I have to make the payment within 15 days or 30 days, so then my working capital is affecting. Okay, so my cash flow is also affecting, because what will happen in case if I am giving payment to my vendor as a advance, okay, but my debtor is giving money after 30 days, so that will means drastically impact on my cash flow. Okay, because I am taking raw material as an advance, but whatever I am selling, I am getting money after 1 year, 2 years, 1 month or 2 months or 3 months. So that is not a good, because that is not a favorable situation position for a company. If I have a contract or agreement with vendor, I will pay in 90 days. But if I'm getting money from debtors in 60 days, so then my cash flow will be every time in plus situation or position. So then I will be able to meet my all the expenses on time. Okay, so I will have not to face any problem in cash flow. Okay, so it means one-sided or loss-making contracts need to be cancelled or revised with the approval of COC. So that is the another way of restructuring the supply chain or vendor contracts, revising or cancelling expenses, one-sided or loss-making contracts with COC approval. Ensure procurement and sale align with the revised business model. Okay, this thing we have discussed means sales align with the revised business. Our business model is good when my recovery period is less, my payment period, okay, and in payment period is more. So then that is the means good business model. Okay, if I am to revive, so then I have to work. We can also understand if I am to pay in 90 days, if I am getting 90 days, although I can survive because I will have to infuse one-time working capital. Okay, in this situation also, I will be able to revive. Okay, but that is very risky situation for me to manage cash flow when my debtor is giving money after 90 days and I am paying money to my vendors less than 90 days, although in 60 days. So that situation is not good for the company from cash flow point of view. Okay, from there maybe, because if I am making very good money, very much money. Okay, see, also there is another way we can also discuss. For example, if vendor is giving me better discount, if I'm getting more, means getting goods at a reasonable rate, at discounting rate, then there is no problem. Me, as per business requirement, we have to take this decision. But in normal circumstances, when vendor is not giving discount, vendor is not giving means giving the goods and services at a lower rate. So then in normal circumstances, we should have a good business model. Okay, if debtor is giving money in 3 months, but we are in position to make good money, okay, at higher profit. So although we will have to infuse the working capital, okay. So we in this way also we can manage, but as per the business requirement, we have to take the decision. Okay. Now ownership and management restructuring. Number 3. Number 1, financial restructuring, we have discussed. Number 2, operational restructuring. These are the things. Now coming ownership and management restructuring. IBC fundamentally shifted from a debtor in position to a creditor in control model. Okay. So that is the primary, means fundamentally move or shift. Now, in corporate restructuring, under the management or ownership restructuring, what we do? Removal of defaulting promoters. Okay. Why we have to do all those things? Because when, as per IBC code, that is mandatory as per section 29A, we have to means remove defaulting promoters. Okay, defaulting promoters are barred from submitting resolution plans. Number 1, they cannot submit the resolution plan as per the mandatory requirement section 29A. Okay, prevents backdoor entry and protects creditors' interest. Okay, from IBC point of view, that is very important and critical. Okay, because if they will again come into the business, okay, so they will also again do the same mispractice. So that will also again means hit the business, and company will not be able to survive, because management will not be save the and do the balance interest of all the stakeholders in this situation if defaulting promoters are in the business. Okay, now change of management. Resolution plan usually provide for takeover by new strategic investors or financial investors. Example, Bhushan Steel, now Tata Steel BSL. Management shifted from single family to Tata Steel. Okay, means Bhushan Steel management. Okay, because we are changing in the management. Okay, when Bhushan Steel was taken over by the Tata Steel, management shifted from single family to Tata Steel. Okay, so that is the also the part of the restructuring process under the change of management. Okay, now acquisition by PE, foreign investors. PE means private equity funds, foreign investors or government institutions, private equity funds, sovereign funds, and even PSUs like NTPC, NBCC, LIC have acquired companies under IBC. Okay, so means they have invested. Okay, so means private equity funds, sovereign funds, and even public sector undertakings have acquired companies under IBC. Brings in a professional management and new strategies for revival. Okay, that is also the another part. Okay, now coming to the main part, that is more related to the Companies Act, I will say, because as per IBC code, we means do the corporate restructuring under the section 7 financial creditor, section 9 operational creditor, section 10 by corporate debtor or corporate debtors, and there is also if a financial creditor can also submit application against corporate debtor under section 7. Okay, now there is another way in the corporate restructuring that is more related to the Companies Act. Okay, see, in case of merger and amalgamation, IBC has enabled merger and amalgamation as a part of resolution plan, offering flexibility beyond the Companies Act. Okay, now because under the resolution plan, when resolution applicant submitted resolution plan, on the basis of resolution plan, merger and amalgamation as per the IBC code, that is the main important part, because it depends on the resolution plan, it depends on the company, which company is in CIP process. Okay, but whatever action or whatever resolution plan will be approved by COC, Okay. NCLT will also approve the same plan if there is no legal issue. Okay. If there is no violation of any rule and regulations, so they will approve the resolution plan because they adjudicating authority don't interfere the commercial wisdom decision taken by the COC. Okay. So now, if as per resolution plan, merger and emulsion is proposed, and that is required as per the business requirement and as per the rule and regulations of the IBC code, so then that is taken or considered by the COC, and after approval by COC, NCLT take the also approve the same. Now, merger emulsion with the resolution plan, a corporate debtor can be merged into another company or vice versa, subject to COC approval. Okay. NCLT approval under section 31 IBC is binding on all the stakeholders. Okay. If any commercial decision taken by COC means resolution plan approved by the COC and also the same is approved by the NCLT, that will be bind on all the stakeholders, including statutory authority. Including statutory authority means income tax authority. If there is also GST authority, whatever another authorities, they will also bind by the resolution plan. Okay. For example, income tax authority submitted their claim. Okay. So then claim will be settled as per the rule and regulations, as per the waterfall mechanism under section 53. Okay. So means it doesn't mean the government authority submitted claim. So the priority will be given to the statutory authorities. In earlier act, these things are happening because the priority in the payment was given to the statutory authorities. Okay. So, but now after IBC code 2016, statutory authority, as per this rule and regulations, government objective is to revive the business, not to the recovery. Okay. And if statutory authority have to take any dues, they will also submit the claim as per these rule and regulations. Okay. Now, override of Companies Act 2013, Section 230, normally merger required procedures under the Companies Act, but under IBC, NCLT approval of a resolution plan has the effect of the sanctioning the merger, eliminating duplicative procedures. Okay. Example, Reliance Infratel Limited resolution plan included amalgamation with Reliance Geo Group entities. Okay. So in this way also the corporate restructuring is done. The another way is sale of business or assets when revival is not possible. Okay. Revival means during the CRP process, if it's not practically possible to revive the business, okay, so then what will happen? Restructuring happens through liquidation. Okay. So that is the last stage and last step. So then liquidator will sell the company's assets, liquidate the assets, and distribute the sale proceeds under the waterfall mechanism, section 53 of IBC code. Sale of business as a going concern, regulation 32 of the here assets are sold on the basis of liquidation value, but if asset can be sold at the maximum value using a going concern, so then because our intention in the liquidation process to get the maximum value of the asset so that sale proceeds can be distributed amongst the creditors. Okay. Now entire business undertaking is sold. Employee and operations are retained. Ensure continuity and maximize value compared to a piecemeal liquidation. Example, Alok Industries was sold as a going concern to Reliance Industries and JM Financial Consortium. Okay. Sale of business and division separately. Okay. If company have 5 or 6, 7 divisions, if company is in loss in one of the division, and company wants, if that division will be sold, so then company will get more benefit or company can revive. So in this situation, under the corporate restructuring, companies also sale of business division separately. Okay, they will know, they don't sell the entire business. Okay, if they are, for example, if there is a one company, they are producing 4 different type of products. Okay, 3 products they are, that company is making profit, but another 4th product they are unable to make the profit, and due to this entire company is in loss. Okay, and revival is also at this stage. So then what will happen? Then it will be good, or it will be better for company either to control the expenses, increase the revenue. If not possible, so then either company should shut down that division or sell the division. If company will sell this division, will be more profitable, more good to the company, because in this situation company will get maximum value of the assets. If they will shut down the business, so then company will have to sell the assets at the liquidation value, so then company will have to bear the loss. Okay, now asset wise sale. Sometimes what happens, if practically not possible to sell all the assets person. Okay, so in this situation what happens? If going concern sale not feasible asset, so for example, company have a different type of different assets, so then sometimes maybe resolution applicant or means buyer are not interested to get to buy all the assets in one go. If we have a different buyers, and also if one party submit the quotation, say 100 crore for all the assets. Okay, if I will sell, if I also have a different type of vendors. Okay, if I will sell in different means separating all the assets, so if I am in position to get 150 crore, so then it will be good for me to sell the assets in piecemeal liquidation. Okay, means if going concern sell not feasible assets, land, building, machinery, IP, etc., are auctioned individually, so then value maximization is still ensured by following e-auction and Swiss challenge mechanism. Okay, so this is also the part of the corporate restructuring when we are selling complete business, when we are selling any division, when we are selling assets in piecemeal liquidation. Okay, so there are different type of corporate restructuring under the sale of business assets is done as per the business requirement. So our intention here is to maximize the recovery of the business or maximum recovery of the assets. Now, what is the conclusion? The IBC framework allows multiple forms of restructuring tailored to the needs of each district companies. Financial restructuring restores balance sheet, because as we discussed, if we are facing financial crisis, my cash flow is affecting very much, and revival is not possible. So then financial restructuring, I will be in position to do the changes in my cash flow with the help of the financial restructuring. Operational restructuring improves efficiency. Okay. Ownership restructuring ensures professional management. Merger and acquisition under IBC provides consolidation opportunities. Sale of business investment. In all these situations, what is happening? Ultimately, our objective is first objective is to drive the business, otherwise recovery, maximum value or recovery of the assets. But in all these situations, our action are taken in the interest of the business. When we are talking about the financial restructuring, means we are restoring balance sheets. Means if cash flow position will be good and in the favor of the company, so then company can be revived and can generate more revenue or more profit. If operational restructuring, if we will do, okay, if we are reducing the business size, we are increasing the business size, okay. If in both the situation it's giving the positive impact, then we will go for operational restructuring. Okay, if in case of ownership restructuring, professional management is coming, so then what will happen? They will take the better decision. Okay, so there there will be very much chance to revive the business, and as well as we can expect more revenue or more profit, which will be in the interest of the company. In merger and acquisition also gives the opportunity to revive the business, because as per resolution plan, as per IBC code, have to adjudicating authority have to take the decision in the interest of the business. In sale of the business assets, maximize the value, because when we are not in position to revive the business, so then our aim to maximize of value, so that we can get from the liquidation, so that we can distribute the realization of the assets. Okay. Thus, IBC provides a holistic restructuring ecosystem, making it India most effective mechanism for handling corporate distress. Okay, so that are the different type of corporate restructuring. Now we will discuss process types, process issue and challenges. If you want to take a break for 10 minutes, we can take. You want to take break for 10 minutes? Otherwise, we will continue.
Yeah, sure, sure. Break is good for 10 minutes.
Please confirm you want to take break or not. Otherwise, I will continue.
No, it's good, sir. 10 minutes break is good.
Pardon?
10 minutes break is good. After that, we can start.
We are taking 10 minutes break. Then we will
Yeah.
continue.
Sure, thank you.
So your screen sharing is on.
Okay, we can start now. Now we will discuss what is the process. In short, we will discuss the process. After this, we will also discuss the practical issue and challenges. The complete process for corporate restructuring both under Companies Act and IBC or 2016. What is the process under Companies Act? As you know, section 230, 232, merger, amalgamation, demerger, arrangement and compromise. What are the steps? First, board approval. We have to take the board approval, draft the scheme of arrangement, merger, demerger, pass board resolution approving the scheme and authorizing filings. Then application to NCLT. We inform NCLT 1, file application to the jurisdictional NCLT for directions to convey meetings on member check items, NCLT directions, NCLT issue orders, fixing date, time, place of meeting, then quorum and voting thresholds, mode of voting, physical, e-voting, postal ballot, notice to authorities, sub schemes to ROC, or to official liquidator, SABI if listed, CCI if applicable, income tax department, other regulators, RBI, ADA, etc. if relevant, meeting of members and guiders, hold meeting as directed by NCLT, obtain approval from members, majority in numbers plus 75% in value, guiders majority in number plus 75% in value, petition for sanction from NCLT 6, file petition with NCLT seeking final sanction of the scheme. NCLT will give the sanction order. NCLT examines fairness, compliance, and public interest before approving the scheme. Then INC 28, filing with ROC, file certified copy of NCLT order with ROC within 30 days. Scheme becomes effective from the date specified in the order or as per the scheme terms. This is the standard process under the Companies Act when section 2 and 30, 230 and 232 attracts. There is another process under IBC, merger, amalgamation or restructuring as a part of resolution plan. Okay. As per Companies Act, that was not the part of the resolution plan. Okay. That was the normal merger, amalgamation when two companies are taking decision for merger, for amalgamation, for demerger. Okay. So that was the normal business decision taken by the companies. Okay. So in this situation, they are means submitting application for the purpose of amalgamation, merger or demerger with NCLT. But there is a now there is a standard process as per resolution plan when company went in the insolvency process, whether in CRP or liquidation. So then, according to the resolution plan, if company is in the process of, the company will go in the process of merger, amalgamation or other restructuring as a part of resolution plan, section 5, 26, 30, 31. So then, as you know, the application filed by financial guarantee under section 7, if there is a corporate guarantee given by company, so that financial guarantor can also file and take action against the corporate guarantor. If financial guarantor is unable to get the recovery from the debtor, so then they can also take the legal action and also can submit the file and petition with against corporate guarantor. Operational guarantor under section 7, 9, section 9. But here, when any application is submitted under section 9 by operational guarantor, as you know, the threshold limit is 1 crore. Now, earlier limit has been increased. Now, threshold limit is 1 crore. But in case of any application submitted by the operational guarantor, as per mandatory requirement, operational guarantor have to issue the demand notice, section 8. Okay, for at least 10 days is mandatory when any action or any application submitted by the corporation director. So that director will have to means to give the notice for recovery, that is called the demand notice as per section 8. After 10 days, if the operation director don't get the payment or any means, so then operational director can submit the means application or under section 10 by corporate debtors as per under section 10. NCLT admits application and declare moratorium. See, that moratorium is very important from in this process. In next few slides, we will also discuss on moratorium. As per section 14, moratorium applies when the application is means accepted by the adjudicating authority. Okay, now what is the further step? Appointment of interim resolution professional. Okay, IRP, the appointed IRP takes control of the debtors management and assets. Public announcement. Okay, insolvency professional have to do the public announcement within 5 days. Actually, this is a time-bound process. Formation of committee of creditors within 30 days. Comprising all financial creditors. COC takes all decisions by requisite voting share more than 66%. Major, if there is a decision is it to be taken by the normal business transactions, so then 50%. Otherwise, for key decisions are taken by the COC with more than 66%. If COC is to take this decision for withdrawal of application under section 12A, so then 90% voting share or voting approval is required. Preparation and invitation for resolution plan. RP invites prospective resolution applications to submit plans which may include merger with another company. See here. Preparation and invitation for resolution plan. Resolution professional invites prospective resolution applicants to submit resolution plans which may include merger with another company, amalgamation in another entity, business or asset sales, or debt restructuring. Okay, means resolution applicant can submit resolution plan and that resolution plan will be means approved by the COC if they are means okay with that resolution plan. That is the discretionary power with the COC. That is not mandatory. If resolution plan submitted by only one party, then COC will have to approve that resolution plan. That is not mandatory. COC can take commercial wisdom decision. If COC not accepted any resolution plan, okay, if COC thinks that resolution plan is not in the interest of the business or in the interest of the company, if resolution plan is not approved by the COC in the time frame, so then company will go into the liquidation process as per the IBC code 2016. Evaluation of resolution plans. COC evaluates based on the feasibility, viability, and compliance with the IBC norms. Approval by COC resolution plan must get more than 66% voting share approval of COC. NCLT approval. NCLT examines whether the plan meets IBC requirements, including payment to creditors, management changes, statutory compliance. Okay. If NCLT examines and found that resolution plan meeting the IBC requirements, okay, and statutory compliance, okay, so then NCLT will also approve the resolution plan, and then after approval of the NCLT approval by as per section 31, so that resolution plan will be binding on all the stakeholders. Implementation. Approved resolution plan becomes binding on the corporate debtors, employees, creditors, government authorities, and other stakeholders. Key difference in process. Trigger. What is the difference here? Trigger voluntary decisions of solvent company. Okay, here two companies are discussing for the purpose of taking benefit. Means, for example, if there is a company, there is a B company, if they will merge, so they can have better operational means control. Okay, means if benefit after merging of two companies is more than the individual, so that is the means base of that decision. Voluntary decision by solvent company. Here, insolvency situation is default because in IBC code, aggrieved party submits the application whether in 7, 9 or 10. Okay, here solvent company is taking decision. Okay, that is the main difference. When that process or that corporate restructuring is triggering, here voluntary decision, here insolvency situation. Control, existing management runs process, here resolution professional plus COC. Because here in IBC, management authority and power, okay, is withdrawn as per IBC code, and all the powers are vested in the resolution professional or COC, committee of guidance. Main objective here, business strategy, capital structure optimization, here debt resolution and revival. Time frame. In this process, no fixed timeline. It depends on the negotiation. Okay, and their mutual understanding. Okay, and as per their discussion, but subject to ancillary scheduling. Okay, but in IBC, if any company is in insolvency process, so then there is a time period is given, mandatory time period is given, 180 days plus 90 days extension, maximum 330 days. Here, members and creditors, okay, in shareholders meeting or creditors meeting, 75% of value approval is required for that type of merger, amalgamation, okay, or any restructure. Shareholder means approval is required more than 75%. In IBC code, all as we have discussed, as you know, all the decisions are taken by only the COC with 66% voting share. So that is the key difference. Okay, when there is a capital restructuring is there, okay, insolvent company can also take and go for corporate restructuring, and here in IBC also company can go for corporate restructuring, but here default triggered, but here in companies the voluntary decisions triggered. So that is the main difference between Companies Act 2013 or IBC Act, IBC Code 2016. Okay, now what is the legal framework under IBC for restructuring? In short, we will discuss legal framework. The Insolvency and Bankruptcy Code is India's primary law governing restructuring and insolvency. It consolidates fragmented provision of multiple laws. Companies Act, this thing we have discussed. The code creates a creditors in control with time-bound mechanism to ensure that distressed companies are either restructured or liquidated in ordinary manner. Objective under IBC, we have discussed resolution over liquidation, maximization of value of assets, balance of interest of stakeholders, promotion of entrepreneurship and credit discipline. This thing we have discussed. Statutory basis of restructuring under IBC. Part 2, Section 4 to 77, insolvency resolution and liquidation of corporate persons. That is the provision. Part 3, insolvency and bankruptcy for individual and partnership. Part 3A, sections 54A to 54P, pre-packaged insolvency for MSME introduced in 2021. That is also very important. In next slide, we will discuss. That is very important because earlier that provision was not there. As we have discussed, the government is doing the amendment as per the industry requirement. Earlier that provision was not there. That's why we have discussed the missing provision for and rule and regulations for group insolvency and cross-border insolvency will come very soon. Schedule amend allied legislations, companies act SURFACE and RDDBFI Act etc. Earlier threshold of default was 1 lakh in 2020. Now that is raised to 1 crore. Corporate restructuring process under IBC. Relevant section 6 to 32 read with IBA regulations. Who can apply? Section financial character, operational character, corporate character 7, 9, 10. Trigger default 1 crore. Process NCLT admission under section 710. Admission or rejection. Once admitted, moratorium declared in section 14. This thing is very important. We will discuss. That is very, very important. Important appointment of IRP and resolution professional sections given 16 to 22. Public announcement for claim. Formation of COC section 21. Resolution plans invited section 25. Evaluation and approval by COC with 66% voting shares. NCLT approval makes it binding on all the stakeholders under section 31. Timeline given 180 days, 90 days extension total. 30 days. Supreme Court in SR still confirmed this. Okay. So that is very important. Now, there is another important and critical amendment done in 2021. Pre-packaged insolvency resolution process. That is above was the normal CRP process. There is another pre-packed insolvency resolution process was introduced in 2021. Section 54A to 54B. Applicability MSME with default between 10 lakh and 1 crore between. Okay. If there is a default between by MSME, okay, so then there is a pre-packaged insolvency resolution process because in normal CRP takes much time. If it will take much time, so that the cost will be also at higher. But for MSME, these are very small companies. So then the resolution plan given for those companies, the time limits are set shorter as compared to CRP because if short period resolution will be done, so then the cost will be less and comparative. Okay, so that cost can be borne by MSME. Otherwise, in more time limit, more cost will impact on the MSME's business. So then, key feature given under this process, hybrid model, debtor remains in position, but COC control process. Okay, debtor remain in position. Prior agreement with 66% financial creditors needed. Resolution plan negotiated before filing. Time limit will be 120 days. 90 days to submit the plan plus 30 days for NCLT approval. Okay. Now, what is the advantage? Lower cost, faster process. If earlier what was happening, if MSMEs were going in the normal resolution plan, the time was taking very much, cost was taking very much. So that's why now, after introducing this section, advantage, lower cost, faster process, business continuity, threshold for initiation of CRP general rule. General rule was 1 crore. Okay. But if default is by MSME is more than 1 crore, so then company MSME will have to go in the normal CRP. Under the threshold for initiation of CRP general rule is under section 4 of the IBC, minimum default amount required to trigger CRP is 1 crore after amendment 24th March 2020. This means for corporate other than MSME, CIRP under IBC cannot be initiated if default is up to 1 crore. Special provision for MSME recognize their importance and vulnerability. The government introduced section 248A and section 54A to 54B, chapter 3A pre-packaged insolvency resolution process for MSME. MSME the minimum default to initiate PRP is 10 lakh, notified dated 9th April 2021. So if default is 10 lakh to 1 crore, they can use pre-packaged insolvency resolution process PIRP under IBC. If default is more than 1 crore, they may proceed under normal CRP. Means if their default is up to 1 crore, from 10 lakh to 1 crore, so then MSME can take the benefit of PPIRP rule and regulations. If default is more than 1 crore, then that company will have to go in the normal CRP process. The key feature of PPIRP for MSME, data in position model, management stays with promoters. Okay, because in this situation, what is happening? Management stays with promoters means, because if when we are removing promoters, so then what will happen? It will be difficult for us to get the money recovery from the debtors. Okay, and also will be little bit difficult to means smooth operation of the business, because promoter have a good understanding and relationship with debtors and creditors. Okay, so that's why, and also there is a very less time in this process. So that's why it's not viable and feasible to take means only to own the means position only by creditors. Okay, so that's why management stays is promoters under the creditors oversight. Faster resolution 120 days timeline compared to 180 days to 330 days in CRP. Only MSME registered under MSME Act are eligible. Initiated voluntary by the corporate debtor are approval by 66% financial creditors, unrelated parties. Why MSME were given this window? To balance ease of doing business with creditors protection. MSME are crucial to the economy, but often lack resources to survive prolonged CRP. Okay, so that is the reason. PPIRP with 10 lakh threshold gives the rescue mechanism even for smaller defaults. In summary, MSME with defaults between 10 lakh to 1 crore can initiate insolvency under PPIRP. CRP under IBC normal process requires default more than 1 crore. Now we will discuss the moratorium. That is very important and critical, because when moratorium starts, then no legal case can be filed by any other company or any other party. The moratorium under insolvency and bankruptcy code as per section 40. This is one of the most important protections available once the insolvency process starts. Relevant section 14 of IBC 2016. The adjudicating authority declares a moratorium when admitting an application for CRP under section 7, 9, and 10. The moratorium starts from the date of admission, okay, and remains in force until the complete of CRP or it is lifted by the LP. Okay, the moratorium starts from the date of admission. Now, moratorium provides during moratorium, the following actions cannot be taken against the corporate debtor. Institution or continuation of suits or proceedings. Okay, no new case or continuation of existing case. Neither new case can be submitted against the company or continuation of existing case against the corporate debtor. Okay, accept certain proceedings that is reads in higher court. Okay, higher courts. Execution of a judgment, a decree or orders. Any judgment, decree, or arbitration award can't be enforced. Okay, for example, if secured creditors were in the means process to take the secured assets in the custody for the purpose of recovery of their loan. Okay, but what will happen when application is submitted with NCLT and means as admitted? So then all the other acts will not be applicable, because so then this process will not be possible. Means IBC Act override all the other acts. IBC is the code and code overrides all the other means act, whether that is Income Tax Act, whether that is SurFaCi Act. Okay. So means IBC won't override all the other acts. It means execution of judgment or decree orders, any judgment, decree or arbitration award cannot be enforced. Now there is a transfer, incumbrance, and alienation or disposal of assets. Corporate debtor assets are frozen. Promoters cannot sell or encumber these assets. Okay. When CRP process starts, then corporate debtors cannot sell any assets. Okay. If because IRP will take all the assets in his custody, or resolution professional will take all the assets in his custody and take the resolution plan from resolution applicant. Okay. Because their intention is to write the vehicle. Okay. Recovery or enforcement of security interest. Secured creditors cannot take position of assets under SurFaCi or otherwise. So that is also very important, because if they have already taken, so then nothing can be done. But if secured creditors, security interest, recovery or enforcement is in the process, okay, so then after submitting the application, when moratorium starts, section 14 attract, so then will not be possible to recover their loan and interest after selling the secured assets. Okay, means that the SurFaCi Act will not be applicable because IBC override this act. Okay, recovery of property in position of corporate debtors. Owners, their lessors cannot repossess property, lease premises, machinery if it is being used for business. Okay, exceptions. There are also exceptions is also there. Means that is also why these exceptions are not barred by the moratorium, because if this supply, see here, supply of essential goods and services, electricity, water, telecom, IT services must continue. Because these are the basic and essential services which is required to run the business, to run the office. If this will not be these services will not be withdrawn. These services will be continued. Okay, so that is the exception of the moratorium. Transactions required for CRP allowed for the resolution professionals approval. Criminal proceeding, tax proceeding for determining liability and risk under section Article 32 and 23 are not done. Okay, means if there is a criminal proceeding against any debtor, any management person or any employee, so that cannot be withdrawn. Okay, if there is a criminal proceeding, so that is the exception. Okay, means that will be there. Now the moratorium doesn't apply to securities grantors. That is also very important. Very, very important. See, if moratorium will start on the corporate debtor, because the insolvency professional is appointed in that company. But if there is a corporate grantor is also there, so then moratorium will not means attract or apply on the corporate grantor. Okay, as per the IBC code. Because first the recovery and revival of the business where that default happened. Okay, so then IBC would attract where this company default happened with the corporate debtor, not with the corporate grant. Okay, duration. Moratorium is effective from admission of CRP application till the approval of resolution plan or order of liquidation. In short, Section 14 of IBC provides moratorium to give the corporate debtor a calm period where creditors cannot enforce claims, allowing restructuring to happen smoothly. Now, in case CRP fails, then company will go into liquidation. Liquidation, if resolution fails, Given section 30 to 34, when triggered, if no resolution plan is received, if CSC votes for liquidation not equal to or more than 66%, if NCLT rejects the resolution line, in all these situations, liquidation process will start against the company. Process: appointment of liquidator, realization of assets through sale of the company as a going concern, sale of a business unit, piecemeal sale of assets. This we have discussed. Now, that is also very important, waterfall mechanism. Okay. In shortcut, we are discussing, but in detail, you can also refer the bottom. When in case of company goes into liquidation, liquidator will sell the company's assets and distributely selling proceeds from the sale of the assets as per waterfall mechanism, as per section 53 CRP and liquidation cost, secured creditors, workmen dues, employees other than workmen, unsecured creditors, government dues plus unsecured portion of secured creditor, preference shareholder, equity shareholder. So these are the this is the waterfall mechanism. Okay, in detail you can refer, but in summary I have already shared with you. Special legal provision for restructuring. Okay, there is a special provision means there is a special or means there is a specific provision as per section 12A, withdrawal of CRP. If any application is submitted with NCLT and accepted by the NCLT court, but later on, if COC members or management COC decides due to commercial means point of view, commercial decision, they need to they want to withdraw the petition. They can withdraw the petition if they, after the approval of the 90% or more than members' approval is required to withdraw the petition as per under section 12. Okay, now these are the special provisions. Okay, these are we need to remember. Bars, willful defaulters, promoters of NPA and connected persons for submitting plans. That is also very important. 32. Resolution plan must comply with laws and protect operational guiders. Okay, means operational guiders will get at least or more than the liquidation value. Okay, because operational guiders are not the part of the COC, only financial guiders are the part of the COC. So means they will take all the decisions in the interest of all the stakeholders. It doesn't mean that only financial guiders are in the COC. They will not take care and they will take care or take action only in the interest of the financial guiders. That is not means allowed as per IBBI code. The COC is responsible to take decision in the interest of all the stakeholders. Section 31, NCLT approved plan binding on all the including government authorities. That is also very important. Section 32A, immunity to corporate debtor for past offences once resolution plan approved. Okay, that is very, very important. If he has done any means non-compliance, I will say if there was any non-compliance. Okay, if there was any offense, means not a criminal. Okay, as per business, if they have done any means offense, so after starting insolvency process resolution, so then corporate debtor will immune from the past. If for example, if resolution plan is approved, okay, so then he will not be means responsible for previous any offense or any means charge. Okay, now 23 to 38. Section 238, that is very important. IBC overrides other inconsistent loan of same clause, that is very important, section 230. Means if there is any contradiction between IBC code or any other act, for example, if as per Income Tax Act, they have the power to take the assets in their custody. Okay. But insolvency resolution process application accepted by the NCLT code. So then Income Tax Authority will have to will not have the authority to take that asset in their custody. Okay, after insolvency resolution process start as per section 238. If will attract in that case. Okay, now another is institutional and regulatory framework, adjudicating authority. There is the adjudicating authority, NCLT primary body for CIRP, PPIRP and liquidation. PPIRP we have discussed that a special provision introduced for MSME, normal process CRP and liquidation was already there, but NCLT, all the applications are first submitted by with NCLT. In case if any party thinks decisions not means agree with that decisions or want to go in the appeal, so then application for means appeal can be done with the honorable enclave. If any party not satisfied with the decision of the enclave, so then further they can approach to the Supreme Court, further appeal on questions of law. Okay, so means they can, after the enclave, if there is a still further appeal can be done if there is a question of law is there. Okay, in here, who is the regulator? IBBI regulates insolvency professionals. Insolvency professional means institutes. Okay, and utilities. Okay, and monitors insolvency ecosystem. So that is the regulator. All IBBI is the regulator in this IBC code and IBC process. Legal framework, key participants. Insolvency professional, money, CRP and liquidation. Committee of Creditors, COC, decision making body. Resolution applicant submit resolution plans. Information utilities, authenticated record keepers of financial information. Now we can compare IBC versus companies. IBC insolvency creditor driven, scheme of arrangement, merger compromise, control creditor COC. Here, promoter of board, time limit 330, no time limit, revival and insolvency process. Here, corporate restructuring. Here, authorities NCLT COC plus IBBI. Here, NCLT shareholder, obligators, applicability, discharge assets. Here, healthy centric restructuring. So that was the difference between IBC Act and Companies Act when we are referring the companies restructuring, corporate restructuring. Now, there is a legal framework. There are landmark judgments. This Ribbons Private Limited versus Union Bank of India upheld constitutionality of IBC inside resolution versus liquidation. Okay, so that is the landmark judgment. We will also discuss the landmark judgment detail in the next slide. SR Mittal India Private Limited versus Kishore Gupta clarified scope of section 229A, which we have discussed. Not allowed to default promoters or directors. SR Steel India Limited versus Kishore Gupta upheld COC's commercial wisdom upon 330-day time limit. Okay, so that was upheld by the Supreme Court in 2019. JP Infratech Limited 2019, home buyers treated as a financial creditor. Okay. So these are the landmark judgment because see earlier it was not clear. Home buyers should be treated as an operational creditor or a financial creditor. But as per Supreme Court's given the judgment, home buyers will be treated as a financial creditor, because before this judgment, means it was really difficult to take a decision ki whether home buyers should be in the means heading of financial creditor or operational creditor. Okay, if normally you think, because if I have bought the home, I should be treated as a operational creditor. Okay, but here, because when the home buyer purchased the home, they have not means entered in the home, because they have invested the money. After then that home will be ready, so then home will be given to the home buyer. Okay, so that's why adjudicating authority of the Supreme Court decided the home buyer should be in the category of the financial creditor. Okay, so means then they have given the judgment, the home buyer will be treated as financial creditor. So now, if there is a home buyer, application submitted as per section 7 as a financial creditor. Now there is another case, Ghanshyam Mishra and Sons, Adulus ARC 2021, Supreme Court. Claims not part of the approved plan stand extinguished. Okay. That is also a very important part, because this resolution plan already approved by the COC, okay, and by the NCLT. If all of a sudden, if a claim coming into the picture, so then who will pay that claim? Because if resolution plan already submitted, if he will bear that expenses, that is not fair. Okay, so means if claim is not submitted on time, and if resolution plan already approved by the NCLT, so then after this approved plan, claims will not be the part of the resolution plan. Okay. Now, significance of IBC in corporate restructuring. Shifts control from debtor to creditor, introduce strict timelines and ever greening of debt, introduce strict timelines, promote global investor confidence, ensure value maximization through competitive bidding, stands India's ease of doing business ranking. Okay, so these were the legal framework. Okay, very important, because these landmark judgments are very important, because when we stuck up and if there is no clarity in rule and regulations, so then these landmark judgment give guidance how to deal that matter. Okay, if we will take decision in the light of the landmark judgments, so then there will not be any issue, because then if any stakeholder approach to the adjudicating authority, so then it means insolvency professional or COC or any other stakeholder can give and can give or refer these landmark judgments. Okay. Now we'll discuss what is the benefits of corporate restructuring under IBC. Okay. Because earlier there was a disadvantage, there was an issue and challenges. Now, after introducing IBC code, if company can also go voluntary for liquidation or for CRP, if corporate debtor thinks corporate debtor is insolvent, they can also apply for a CRP process. So there are some benefits also of corporate restructuring, and this is also because due to the time period is there. Okay, because if there is a time limit, within time limit we will do, so then our business we will not lose, and we will not make further loss. Okay, timely resolution framework, the IBC prescribes timeline, 180 days plus 90 days extension capped at the 330 days, including litigation for completing CRP. This ensures faster decisions compared to the pre-IBC regime, where restructuring could take years. Earlier, it was taking 4 to 6 years. Now it's taking only 180 days, maximum 330 days. Okay, means now even though practical delays exist, average resolution time is still significantly lower than the under earlier rules. Okay. Now, we have already discussed that there was a higher recovery rate. Earlier, recovery rate was 20%, and now recovery rate is 40 to 45%. This enhances creditors' confidence in lending. Okay. Because, see, if recovery rate is 40 to 50%, so then what will happen? If bank give a loan, okay, if bank not getting their loan and principal amount on time, okay, and if take any decision, okay, if within 1 year, okay, if company survive, so then financial creditors or bank extracts, they will get their loan and payment, okay, as per resolution plan. Okay. If not survival not possible, then in case of liquidation, after selling the assets by the liquidator, they will get their money back. But in that case, they are getting their money, means at least shorter period as compared to the earlier. Earlier, if there was a taking time more than 6 years, so then their money was stuck up for 6 years. Okay, so then after 6 years, that company was in the liquidation. So then value of the assets was also very low. In this situation, what is happening? The value of the assets, the more main objective is to maximize the value of the assets, recovery in case of liquidation, and they are also getting their money back within 1 year or so. So that is in the favor of the lenders, because if they will get back their money as soon as, so they can invest that money in another business. So they can use their money back in the system due to this IBC code. Okay, now IBC has shifted the system for a data infusion to guide this we discussed. Foreign and domestic investors actively participating in bidding for distressed assets, improving capital flows into stressed sectors, promoter discipline in borrowing and repayment behavior. Okay, professional management and transparency. With the disqualification of promoter, as per section 29, we have discussed, if there is a defaulter, promoters are not allowed to submit the resolution plan. Okay, so that is also a very good point and good rule. Facilitating of merger and acquisition and capital inflow, the IBC has opened a strong market for merger and acquisition of distressed assets, attracting global gains, private equity and institutional investors. Now, consolidation in stressed sectors, that is steel, power, telecom, has been enabled through IBC-driven takeovers. Strengthening of banking sector by enabling recovery of NPAs. IBC helps clean up bank balance sheets, because earlier there was an NPA, so NPA was increasing. Okay, now in case of NPA, so then bank and financial institution can submit their petition as under the IBC code. So means they are getting more recovery, means from 40 to 45% as compared to 20%. So that is also helping means banking system to clean up their bank balance sheets. The frees up capital for fresh lending and improves financial stability. Okay, boost to entrepreneurship by ensuring faster resolution for liquidation. IBC allows failed entrepreneurs to exit quickly, redeploy resources and pursue fresh ventures. Okay, see, if I'm a corporate actor, if I'm failed due to any reason, due to technology, due to not taken business decision, or due to and loss in the business. Okay. And if I think I will not be in position to means continue the business, so then I can quickly come out from the business. I will go in the CRP process, I will go in the liquidation process. Otherwise, what will happen? If I will not make the payment, the agreed party will submit the application. So means the resolution process will be completed within a time period. Okay. So then what will happen? If I am not responsible, means the resolution plan accepted, approved by the NCLT. Okay. So then I will not be responsible for any offense. Okay. Before that date. So then I can also start up any another business if I can means take further decision of my life. Otherwise, what will happen? That if the cases linger on, going on 5 to 6 years, so then that person will not be able to do anything in their life. Means after this code, the solution is faster and stakeholder can quickly get their proper response, can quickly respond, and means after this resolution, so that they can further they can also pursue fresh ventures or whatever they want to do. Okay, now there is also challenges in IBC restructuring. Okay, here we have discussed what are the objectives, what are the types. Okay, as per Companies Act, IBC code. Okay, what are the benefit after introducing this IBC code? What was the disadvantage before that IBC code? Now there is also challenges in IBC restructuring. What are the challenges? Delay in resolution. Despite statutory timelines, case often exceeded 330 days due to heavy backlog in NCLT enclave and Supreme Court, frequent litigation by promoters and guiders. Okay. Example, a SAR steel case took over 800 days for resolution. Okay. There is a mandatory timeline given, but practically, still in some of the cases, take very much time. For example, if any stakeholder submit have any objection, if submit any application with enclave, if enclave is taking time, so then what will happen? So time will means it will take more time. Okay, so that is the reason. Still, after implementing the IBC code 2016, still we are facing delay in resolution. Okay, practically we are facing this type of problem. Still means as of now we are also facing this type of problem in some of the cases. We are not saying in all the cases, but in some of the NCLT, enclave. Because if I am not satisfied with NCLT, then I will go to the enclave. Enclave will also take time. Then if I will not satisfied with the enclave, I can also go to the Supreme Court. So then what it means? It means it's also a time-taking resolution in that case. As per mandatory timeline is 330 days. We agree. Okay. Now there is a high haircut for guiders. In several cases, guiders had to accept deep losses, 7 to 90%. Okay, they are submitting their claim, but due to the business loss, company is not not possible for company to revive the business, then they will go to the liquidation. But reality is this: when they are selling the assets and distressed assets, so their recovery.
हाँ मैं आ रही हूँ.
So that recovery is
अच्छा मैं
less than the 70 to 90%. Okay, so then what is happening if I am to recover 1 lakh rupees? So then if I will get only 20,000,
चलो मैं आ रही हूँ फिर. मैं तो उन्हीं का वेट कर रही हूँ. मुझे पता नहीं कहाँ है.
someone is unmute, please mute. Okay. Example, Video One Industries. Resolution plan offered less than 5% recovery to guiders. Okay. So that is the example. Okay. Means that is also a very big challenge. Okay. We are saying that is a resolution process. That is time bound period. That is okay, 330 days. But in some of the cases, it's taking 800 days, so then the objective of this code is defeating. If I am recovering, means for example, if I have given means as per resolution plan, if I am getting 5%, if I given 1,000 crore, okay, 100 crore, okay, against 100 crore, if I am getting only 5 crore, so then there is a higher cut for guiders. Okay, so that is also a very big challenge in IBC restructuring. Liquidation, heavy outcomes. More than 65% of admitted cases end in liquidation. Okay, that is also a very big challenge. Okay, means what we want to say here, only 35%, around only 35% admitted case, we are in position to revive the business. Okay, if 55%, see, if 330 days, 1 year complete, the company will go into liquidation. It will also take one year. The standard means if I am taking 2 years, but practically it will not take 2 years. It will take more than 2 years. But problem is this: the percentage of admitted CRP case is very much in the liquidation. Okay, if they are giving in the liquidation only 20%, 30%, we can understand, but 65% of admitted cases are in the liquidation. That undermines the revival objective of IBC and erodes creditors' confidence. Okay, so that is very, very big issue here. Okay, that is very risky. This is also very problematic. This is also very okay. Capacity constraints, shortage of MCLT benches and judges, leading to long hearing delays. Because, as you know, this IBC introduced in 2016, so it also took some time to set up the NCLT benches. Okay. Nowadays also we have means benches, but not in every state. In some of the states still we don't have the NCLT benches. So means also there is also a total of judges, so leading to long hearing delays. If any NCLT bench is getting very much cases, so then what will happen? They will give the date of next date of hearing. It will take time. Insolvency professional registered valuers for large complex cases. Okay. There is also a problem for this. Training and regulatory strengthening of these professionals is needed. Okay. Now, this we have discussed in the, that is also very important. Incomplete reforms. Okay. As I told you earlier, there is no specific provision for group insolvency. Okay, there is no specific provision for cross-border insolvency. Okay, means group insolvency framework for multiple interlinked companies is not yet fully implemented. Okay, as I have discussed with you, there was a Videogon case. So that was a group insolvency case. So means there was a multi companies are there, they are given loan, guarantee. Okay, so then not only one company went into the CRP or the insolvency process, all the group went into the insolvency process, but there was no specific provision was there. Okay, due to this, what happened? When case submitted with NCLT, when decision was given, okay, that NCLT used the inherent power as per Rule 11. Okay, because no specific provision was there. So, and also there is no specific provision for cross-border insolvency provision. Who drafted remain pending in Parliament. Okay, so means, so these are in the pipeline, and we are expecting very soon we will have specific provisions and rules and regulations related to these reforms under the IBC code. So it will be easy for us to handle and manage this type of cases. Okay. Now there is another sector specific issue. What are the sector specific issues? Certain industries, real estate, infrastructure, telecom, airlines face unique restructuring complexity. Okay. See, if we have a different type of industries, if real estate company is in the resolution process, if any resolution plan submitted by another company, if they are in the same industry, so that will be good for to handle and manage. Okay, to a company. Okay, so these, for example, because otherwise, if they don't have the means expertise or domain, so they will not be able to survive, or they will not able to operate that business, because different type of industry, different type of company, different type of industry have their different type of means expertise, domain, professional, and according to that, we need the means employee staff, their means structure. So that's why we, this is the also another issue. That real estate, thousands of home buyers must be treated as financial guarantor. Okay. Now, Indian infra airlines assets heavily modeled with few bidders. Okay. Definitely, when any airlines will go in the insolvency process, so you will practically we will find very few bidders, because these are the unique type of industry. Okay, so that is the, because we will not be able to get means more or much buyer. Okay, because this type of industry also required huge funds. That is also also another problem. Okay, so means there will be very few buyers for this type of industry. This makes resolution harder compared to manufacturing or steel. Okay. Frequent amendments. IBC has undergone multiple amendments since 2016. While necessary, constant changes create uncertainty and litigation. Okay, means these are the frequent amendments. Okay, these are the challenges which we also need to know. What are the challenges? If we know what are the challenges, so according to that, we can manage and take decision in the light of the landmark judgments. Okay, but this is the harsh means hard reality. Still, it's taking very much time. Now, we will discuss the future outlook and reforms in corporate restructuring under IBC. What we are expecting, what we need to change in the IBC code. What are the future outlook and reforms? Future outlook and reforms in corporate restructuring under IBC group insolvency framework to allow consolidated resolution of corporate groups with interlinked companies, parent, subsidiary, and national firms. Okay, so for that purpose, we specific rule and regulations required would avoid piecemeal outcomes and maximize group value. Okay, would avoid piecemeal outcomes and maximize group value. A framework has been proposed by the MCA IBA but awaits formal enactment. Okay, so this is the future outlook and reforms we are expecting very soon. Cross-border insolvency based on the unilateral model law adopted in countries like the USA, UK, Singapore. Okay, will allow recognition of foreign insolvency proceedings and cooperation with the foreign courts. For example, if we have a company, that company also have the entity in another country. Okay, so in this situation, on the basis of current rule and regulation of IBC code, we don't have a specific rule and regulation. That it's really difficult to manage in the absence of the specific rule and regulations related to this concern, this cross-border insolvency. will allow regulation of foreign insolvency proceedings and cooperation with foreign courts, vital as many Indian corporates have global subsidiaries and assets. Okay, as you know, ki, so many companies have their global subsidiaries and assets in other countries. If we will have a corporate border insolvency process, then it will be easy for us to cooperate with the foreign courts. And vice versa also, if there is another company in foreign, they have their means subsidiary company in India, okay, the same problem is coming because we don't have a unilateral model, okay, means for cross-border insolvency. So that is the problem, and that will means after the amendment in this rule or adding these rule and specific provisions, we will be able to handle and manage group insolvency and cross-border insolvency processes. Now, strengthening institutions, increasing NCLT and great benches, and appointing more judges. Okay, so this is also our future outlook and reforms. Okay, now building digital case management systems for faster hearings and transparent process in enhancing the number and quality of graduation professional and valuers. Okay, when case will increase, we also need more graduation professional and registered valuers because these both professions are required, mandatory required for the purpose of in the process of resolution process. Expansion of pre-packaged insolvency, currently limited to MSME defaulted up to 1 crore, expected to be extended to larger corporates for quicker constitutional resolutions. There is a sector-specific course. Okay, if we are also, if there will be a unique sector, if there will be a sector-specific course or specific rule resolutions will be there, so then it will be also very good for the means to resolve the to do the resolution process for these type of unique means industries or individual companies. Means special provisions are being considered for real estate, home buyer centric resolution plans, infrastructure, telecom, long term project financing issues, airlines, asset heavy regulatory driven business. So then means if there will be a sector specific course will be there, so that will be good. It will be good and will be easy to handle and manage the insolvency. Okay. Boosting resolution value. Measures to attract more bidders. Relaxing FDI rules for digital assets. Okay. So these are the future outlook and reforms in corporate restructuring under IBC. Creating a bank, asset restoration companies, ARC ecosystem, ensure competitive bidding and better recovery rates. Okay. Improving creditor recoveries, focus on balancing between financial creditor, operational creditor, and home buyers, enhancing monitoring of post-resolution implementation of plan. Okay. We have done, if you have any query or question, we can discuss, otherwise we can conclude this session. If you have any query question, you can ask, otherwise we can conclude this session. And I will share the presentation. Okay, if you don't have any query question, we can conclude this session. Thanks. Have a nice day.
Thank you very much, sir, for giving your valuable time and sharing your knowledge. Sir, please share the PPT of the session.
Thanks, Anjali. Thanks.
Thank you, everyone.
No.